This episode is brought to you by Commerce, parent company of Big Commerce, Feedonomics, and MakeSwift.
Nike had a chokehold on the industry for decades, and they really controlled it by how much of the highly desirable limited edition product that they were doling out to retailers and could dictate what other products they had to buy. That's why I say I think that a less powerful Nike today is good for the industry. It's very clear from this experience that brands need great retailers and retailers need great brands, and neither can exist without the other, or at least not exist at the same scale that they were. I think everybody recognizes that today.
Welcome back to Retail Remix. This week I have with me two seasoned experts in the sports and outdoor sector, which has been at the center of some of the biggest retail news this year. We're going to dig into the impact and undertones of things like the Dick's Foot Locker merger, developments in athleisure at companies like Nike and Lululemon, and what exactly is going on over at Target. It's a wide-ranging conversation that goes beyond the headlines to dig into the long-term implications of what's happening at some of the world's largest brands and retailers. So settle in and enjoy. Welcome back to Retail Remix. I'm your host, Nicole Silberstein, Editor-in-Chief at Retail Touchpoints. And today's a fun episode for me because I have with me my close colleague and boss, Tiffany Montgomery, who is Retail Touchpoints Group Editor and also runs Shop, Eat, Surf, Outdoor, which she founded. And we are joined today by Matt Powell, a senior advisor at BCE Consulting, who has followed the sports retail sector closely for decades. Thank you both for being here.
Thanks for having me.
Glad to be here.
I know you two have worked together for years and you know each other well, but for our listeners who may not be as familiar with your work, tell us a little bit about yourselves. Why don't we start with you, Matt?
Sure. Thanks. So I'm Matt Powell. I'm senior advisor with BCE Consulting. I have been doing research on the sports industry for more than 25 years. Before that, I was a retailer, first in the department store field and then later in the sports field. And I do these kinds of things all the time.
Great. Old hat. Tiffany?
Yeah, for me, I'm more used to asking the questions than answering. So this is new for me. But as you mentioned, I'm the founder and editor-in-chief for Shop, Eat, Surf, Outdoor, which is a business publication for the active outdoor industry. We cover companies like the North Face, Vans, Vuori, Quicksilver, REI, and Columbia. Before that, I was a reporter and editor at what was then a large regional newspaper in Southern California. It's not so large anymore, as you can imagine. But I was there for about a decade, and I covered everything from murders to city hall corruption to business. That was sort of my last stint. And that's how I transitioned into starting my own publication.
So from murders to surfing. Interesting.
Yes.
Sounds like a good move.
Yeah, it was. But all that was good experience. And I got lucky because I was at the paper long enough. And when they offered very generous buyouts in the beginning, I jumped at it and they essentially put me in business. So great training and put me in business. So I'm grateful for that experience.
So the reason I have the two of you on today is that some of the biggest retail stories this year have come out of the sports and outdoor sector. And I want to really get your take on some of these, starting with the Dick's Foot Locker acquisition and the leadership shuffle that was just announced when that finally closed. What's your take on this merger and the executive shifts announced a couple of weeks ago?
Well, I think, first of all, Dick's got a real bargain here. They basically bought an $8 billion company for $2.4 billion. So it's typically we would see selling price at about one-time sales. And so a really, really good deal for Dick's. I think the secret sauce in this is that Dick's is making a big bet that Nike turns around and turns around quickly. When Nike turns around, because I'm a big believer in that. When Nike turns around, I think there's no retailer in the world that will benefit more than Foot Locker. And Foot Locker has a lot of systemic issues, but their biggest problem over the last 5 years has been that Nike's products and sales have not been very good. So I think Ed Stack is making a big bet on Nike. I also think he believes he can bring operational efficiencies to the deal. Dick's is probably the best operator in the sports business today. And, I think back of the selling floor, I think they can make a lot of improvements to this company. So I like this deal. I think Dick's got it for a bargain. And again, I think the big theme here is that they're betting on Nike.
Do you have any insight into why they were able to get it for such a bargain?
Well, it actually was a premium. The price is the premium for where the stock was trading. And so the shareholders got a deal. also they got a nice price well above what they were currently owning their shares for. So I think that would indicate that there was a value for the shareholders, but in comparison to what we typically see in a sale, it's a great bargain.
Matt, I'm curious if you don't mind me jumping in here. Why do you think Dick's has been able to pull away from the competitions so strongly? It seems like it started like right before the pandemic and really accelerated. What is it about them?
Well, part of it is scale. I think, just like Nike, when they were good, could do anything they wanted to because they were so big. I think to some extent, we see the same thing with Dick's. The company of this size now can command tremendous deals from their wholesale partners. They can make big investments in things like loyalty programs, which are very important today. And so scale helps them a lot. Operationally, the best company in the business. There's nobody who has the discipline that Dick's has. And I'll just give you an example. You go into the store on Tuesday and there's no football department. You go in the store the next day and there's a fully fitted out football department, every peg filled, everything properly organized to the planogram. And that kind of operational excellence is just unfounded in this industry. It doesn't happen. So I think that gives them a leverage over all of their competition that they can execute as well as they do.
Do you think there's any risk to this acquisition for them, though? I mean, this could be a big distraction, right? All of a sudden, they're international. They have this huge mall presence.
Yeah, I think that's always a concern with a merger. It's indicated in the papers that were filed that Ed Stack is actually going to be the point person for this, which means he's not going to be looking at Dick's as closely as he used to. And yeah, things can be a distraction. And I'm sure they're going to find things that aren't going to go well here right out of the box. But again, I think the pros outweigh the cons here, but there clearly are some potential cons.
Let's talk then next about Nike. You clearly are, you said you're a believer in the brand. You think the turnaround is coming. They've been in the headlines a lot this year, and not because the turnaround has happened. So what's your read on their current situation and what is actually going to finally facilitate that turnaround?
Well, I think it's important to go back and look at the history here. The previous regime, the previous management team really dug a deep, deep hole, actually several deep holes for the brand. They really believed that they could transfer a tremendous amount of business to Nike.com. They closed a bunch of retailers who were doing significant volume, about 10% of the volume. And they believed that all that was going to flow to Nike.com. That didn't happen. They believed that the consumer was really oriented to shopping digitally and not in physical stores. That's not happening. They found that sales were hard to get because they had closed retailers and they weren't capturing it back. So they became very promotional on Nike.com and they were virtually on sale all the time. Another way to drive volume was for them to take some of their iconic items that they've always very, very closely managed and just stuff the market with those products to the point where they were almost at breaking point. And so all of these things were wrong. And unfortunately, all of them will take time to unwind. It's not something that can be done immediately. One thing I left out was they shut off the innovation engine during the pandemic and spent all of their innovation dollars on digital, again, believing that that was going to save the company, and really shut down the product innovation side. That takes months and months and months to heat back up. So having to dial back their iconic items means you do less business. It's the right thing to do in the long term, but in the short term, it's going to hurt business. Being less promotional, right thing to do in the long term, short term, that's going to hurt business. No great new product to come out and drive sales forward. So consequently, sales are going to be sideways for a while. All of these things are fixable, but they're all a long-term fix. There are no magic bullets here that next quarter, all of a sudden, things are going to be a lot better. I think we'll see sequential improvement for them over time, but it's going to be a while before we say Nike's back. And I would tell you, I don't know that Nike returns to the same dominance that they had pre-pandemic. I think they're still going to be number one in the United States, number one globally, but maybe not by the same margins that they were pre-pandemic. And that's probably healthy for the industry and ultimately maybe even healthy for Nike.
Why? Because of the competition out there up in their
the
game?
Competition's gotten very strong. I mean, because Nike was so weak, it opened up opportunities for other brands to take real estate. And so Adidas benefited, Asics benefited, New Balance benefited, Hoka and On clearly benefited from the weakness weakness in Nike. And now the landscape is much more competitive than it was pre-pandemic. And again, I think that's healthy for the industry. I think it'll ultimately make Nike a stronger company as well.
I can say from our perspective and what we covered that when Nike announced, I'll never forget it, that they were cutting back wholesale significantly. It really sent shockwaves through retailers and brands. Brands were like, oh, if Nike's doing it, maybe we can do that. We'll get more margin. We can control how we show up at retail. We don't have to deal with these pesky wholesalers. And people were watching it really, really closely. And the fact that that failed and now Nike is back to wholesale and talking about partnerships a lot and trying to drive that business, it was a real lesson to others as well. And people are again reemphasizing wholesale. Now, I will say, I don't know if you have come across this, Matt. I have seen in my industry when former Nike salespeople go to other companies, they're not successful in that they don't really know how to sell because Nike dictated so much.
Right.
They dictated what people got. They really didn't know how to sell. So when they go to a brand that's not as powerful as Nike, they're kind of scrambling a little bit. I mean, not everyone, but I've seen it happen several times. So I think it'll be interesting to see if they change that culture internally and how closely they are working with wholesalers. It's interesting. They've opened up new partnerships and are working, working really closely with Urban now. So I just think them and their approach to it will be interesting to see how that all plays out.
Yeah, I think you're right. I think that Nike had a chokehold on the industry for decades, and they really controlled it by how much of the highly desirable limited edition product that they were doling out to retailers and could dictate what other products they had to buy. That's why I say I think that a less powerful Nike today is good for the industry. I don't think Nike's going to be in the same position to make dictating to the industry really work. I also don't think it's the personality of the current management team that they're going to attack the industry that way as well. And so I think you're going to see more of a partnership model here. And it's very clear from this experience that brands need great retailers and retailers need great brands, and neither can exist without the other, or at least not exist at the same scale that they were. I think everybody recognizes that today, and there's nobody having less leverage over the industry is the right place for Nike to be.
So let's talk now about another brand also pushing for a turnaround and not quite there yet, Lululemon. What do you think is going on there? And do you have as much hope for a Lululemon turnaround or belief in it happening eventually as you do for Nike?
I do. I think there's some very talented people at Lulu. I think some very thoughtful people. Again, they're number one. I don't see them giving up the number one position. They may end up with less market share than they had, but they're still going to be the number one brand in the space. I think the real key in activewear is to understand how many brands are competing for that business. And there are hundreds and hundreds and hundreds of brands who are competing for the activewear side, as opposed to dozens of brands competing for the footwear side of the business. And I think that there are always brands that are coming up and down. There's a hot brand this season, a hot brand next season. And the competition is formidable there. And I think it's when you're in that kind of competitive marketplace, it's tough to stay on top and keep growing. And the larger you are, the harder it is to grow at scale. Again, I think you can grow in low single digits. Maybe the stock market thinks that's a failure, as opposed to depending on how you want to look at it. But they have a tremendous management team. They are really, really smart people. And I think this brand will recover. Does it go back to the heights that it had previously? Probably not. But that doesn't mean that the brand has failed.
What do you think of some of these newer brands, to your point about the competition in this sector? I mean, Alo has been really the talk of the town this year. Vuori continues to just really seem to be exciting consumers. What do you think of some of these other brands in that space?
Yeah, I think they're both brands you mentioned are great brands and are doing some interesting things. I think Alo, is a younger, more clubby customer, sexier. I don't know if that's a word I can use anymore, but I just did. I think, Vuori is more focused on men than women, although they have a substantial women's business. So I think they both came at it from slightly different directions and have both been very successful. And I believe they both can continue to grow. And I also believe that next year, there are going to be 3 more names we're talking about we haven't even heard of yet. So, because that's how competitive this space is.
I mean, how many yoga pants do people need, though? This is what I don't understand. Is like,
well, I think this is a great question, because this is actually part of the problem for Lulu is I think they lean too hard on yoga pants. And whereas Vuori has moved beyond its work to work out products, it's a little more dressy, a little more refined, maybe a little less close fitting. Alo sort of gone on the other extreme of really, again, club wear, as I said earlier. And so I think the idea of yoga pants, because I'll give you an example. A few years ago, we had a company meeting in New Orleans. This is before I came off on my own. And as I was leaving in the airport, there was a kiosk selling Mardi Gras yoga pants. And if you could buy yoga pants at the airport, you can buy yoga pants anywhere. And so, I mean, again, I think this just shows how, and by the way, it's pretty easy to make yoga pants. Maybe they're not great yoga pants, but it's easy to make yoga pants, much harder than making a shoe, for instance. So the ability of brands to come into this space, whether they were denim brands or clothing brands who decided to get into activewear, it's really easy to get in here. And so that's why I call this a very, very competitive space.
And I can comment on Vuori. We watch that brand very closely. We've covered it from the beginning. One of their first wholesale stores that ever picked up Vuori was a surf shop, because they're based in Encinitas. So no other wholesalers were picking them up, and a surf shop gave them a try. And it was really fascinating to see them spread across the country. Typically, when something starts on the West Coast in a niche, it takes a while to work in the Midwest, to work on the East Coast. And I started hearing from retailers, like a tiny surf shop in Folly Beach, South Carolina. We picked up this brand and I don't understand it, but it's selling like crazy. And a Midwest, more fashion apparel told me the same thing. And someone in Northern California, and then I would go into REI and I could see that REI was expanding with them. So they work in so many different environments. They have become like almost the number one apparel brand in surf shops and the outdoor channel, like outdoor specialty. They're not, I know they won't like me saying this, but they're not really known for their branding and for like, ooh, Vuori. It's the product. People walk by, they touch it, and they're like, I want to wear this. They buy one pair and then they come back and buy 5. So it's really, in my market, it is working now with both men and women. And it's become a huge growth driver for stores who weren't used to selling things at that price point. It's a little higher than these channels, especially in surf shops, typically sell. And it's selling like crazy. The other thing I would say is I'm impressed with their financial discipline. Joe Kudla, the founder and CEO, he told me in an interview, I think it was last year, they have been profitable since like year 2. And a lot of time these fast growing companies aren't profitable, as we know. But he has a CPA background and he had like a financial investment firm before this. So they've done it the right way. And even when they've raised money, like they've done these big capital raises, he says that's not to fuel their growth and to shore up the balance sheet. It's really about so that existing investors can take money off the table. So it's sort of that combination of how it works in different environments and their discipline. It'll be really interesting to see. I mean, they're probably going to go public, right? So then what? We all know that can change dynamics, but hopefully they managed to stay on track.
I think there are 2 interesting lessons that come out of the Vuori story as well. And you really touched on both of them. One, I had been telling the outdoor industry for decades that your customer is doing yoga. Your customer is doing Pilates. And they would go, oh, no, we're outdoor. We're pure. We have to just stay. We're only going to do rock climbing and that's all. Well, guess what? I was right, if I could say so myself, but that in fact their customers were doing yoga and Pilates and so forth. And so they welcomed the opportunity to buy a brand that was credible for those activities in the store that they already like to shop in. So don't predetermine who your customer is, or maybe better said, understand better who your customer is and what their options might be. And number 2, the second lesson is that Vuori entered the retail space through outdoor specialty before they became a more broadly distributed brand. Essentially flew under the radar. Other brands weren't paying any attention to them because, that's an outdoor thing and it's just a little thing over to the side. And so they got to scale sort of under the radar. And by the time they got to scale, it was too late to stop them. And so I think some really interesting lessons there for the industry as well.
Okay, so now moving a bit further afield from the pure play, like sports brands and retailers, I want to talk briefly about Target, another company that's come under a lot of fire this year and one that I know you've been tracking, Matt. So what I'm curious is how much do you think Target's current problems are really directly related to its pullback on DEI? And if that's not the core cause of these current challenges, what is?
Well, the evidence would appear to be that there is a correlation here. We've seen the reported traffic numbers in decline ever since they abandoned their DEI efforts. So I don't know that anybody's done a study to actually prove that, but we see two things happening simultaneously, and we tend to jump to the conclusion that there's causality there. And I think it's reasonable to think so. My sense is that the target customer is a bit more progressive than some other retail chains, and who might take it on themselves that the feeling that Target was wrong to back out of DEI or to do it as ham-handedly as they did. And so I think you can make a case that some of their woes are that. But I think the other piece, and the new CEO has started already talking about this, is that Target was always a place of discovery and interesting products and things you hadn't seen before, brands you hadn't seen before, products and design. And I think they've lost some of that. I think they've lost some of that magic that they had where it was a fun store to shop in. And then lastly, I think just one other thought, I think Walmart versus Target is winning. Walmart's winning because they're a grocery store. They're the largest grocer in the United States today. And as we've gone through a period of high inflation and stagnant wages and so forth, I think a lot of people went to Walmart to buy their groceries to save money. And while they were there, boom, they bought other stuff that they didn't need to buy from somebody else. So I think Target has a grocery business, but it's not nearly a scale that Walmart's is. And so I think that was a third factor that a lot of people are not talking about.
Yeah, I think it's hard to deny the impact of the DI decision. I have been seeing a lot of commentary lately, just anecdotal from various people in the industry about kind of the state of the store. To your point about it not being as fun to shop there anymore, just messy displays, product isn't exciting. So it feels like there is also just something a little bit deeper with their identity that's kind of going, a little bit of an identity crisis moment here for them.
Agree.
Okay, what did I miss? Those were the big ones I wanted to talk to you guys about, but what other big stories or companies have been notable to you so far this year?
Well, anybody who knows me knows that I'm a bit of a contrarian, and I am not a big believer in AI. And there's a whole lot of people out there who are just throwing themselves off the cliff here on AI. And I can go into the reasons why, but it's a tool. And anytime we have a tool, we're going to use it. I remember when computers first came out and everyone said, oh, no, we won't have to work anymore because computers are going to do all the work for us. Well, actually, computers made our lives more complicated and made more work for us than I think we had previously, and certainly complicated our lives a lot more. I kind of look at AI as the same thing. I do not see it as a silver bullet here. I think it's a tool that we'll use. And there was a piece that came out a couple of weeks ago that 95% of the companies who've implemented AI are not seeing any zero return on that investment. So I think it's real easy to get carried away with the next pretty face that comes along. And I think this is just another pretty face.
What about you, Tiffany?
Well, I was going to say mine are a little further afield, but I guess one of the things that I've been really interested in, I'm going to keep watching, is the Journeys transformation that's going on. You know, they're like the biggest footwear customer for a lot of my brands that I cover, one of the biggest. And their new president actually came from Foot Locker. And some of the changes they made are just, now they seem obvious in retrospect, but they're really making a difference. They've gone deeper with brands. They're doing better brand presentations. They cleaned up the stores. They're focusing on footwear. And thank God they're remodeling the stores because those things were so dated. And they're getting results. And so it's amazing. I have gone to the same mall during back to school for 10 years just to get a read. That store was swamp. It is the busiest I've ever seen it. So it seems to really be working. So that's fun to watch. And then another one's sort of the reverse, which is Vans. Huge company for us. It's like at least in the action sports space, the biggest company, or has been. They've shed about $2 billion in sales in the last 3 or so years. The CEO, Bracken Darrow, keeps saying a turnaround is coming. There's no evidence of it yet. I know turnarounds, especially in footwear, man, right? They take a long time. The lead times are so long, but they've laid off a lot of people. I mean, like a lot. And that was a special company before. It really had a special core to it that I think helped propel it. I don't know what's left now, but I hope they can turn it around. I was shocked in a negative way during back to school, going into their stores, and I have never seen it so empty. I mean, it was, especially the footwear section, there was nobody in there. And the shopping center I was at was mobbed with teenagers, and they were not in Vans. So that was a little disturbing. Hopefully it was just a fluke. But
do you ever think some of this stuff, though, is just cyclical? Like maybe Vans just aren't cool in it right now with the kids, but in 10 years they will be again. Do you think there could
yeah,
be
no,
some
it
of
could be.
that? Yeah.
No one has patience for them to go 10 years to get it fixed. So
Yeah.
it's going to have
It's
to be a
that
lot
bad.
faster than that. But yes, I think they can come back.
Yeah. I mean, they were like the most profitable brand for VF for years. So that, I mean, it really dragged down VF when they tanked, and they were always growing. And then they had this exponential growth and kind of went romance with, and now they shrunk, and now we'll see if they come back. But that's one that I'm watching and I'm rooting for them. I hope they can turn it around.
Well, I don't think we have mentioned the word tariffs yet at all in this conversation, but we got to touch base on it. You guys are both regularly talking with executives in the industry. And so just tell me a little bit about what you're hearing now. I mean, the situation just is so constantly changing at the moment. Just to check in on what you're hearing and how the executives you're speaking to are reacting in the moment, looking forward to holiday and all of that.
Yeah, so I think a couple of things. I think in the early days of tariffs, tremendous uncertainty, obviously. And I think brands and retailers pulled out every trick in the book they could to keep prices down. I think that string has run out. There are no more tricks in the bag to pull out now. And so prices are going, or have gone up and are going to continue to go up. The FDRA just cited a big increase in their measurement of prices, the biggest they've seen in like 20 years. So I think the reality of that begins to set in. I think that it's really important for brands and retailers to take the big view of the long game here and not respond to little changes here and there. I think they need to focus on brand equity. I think they need to focus on making sure they keep the innovation engine running. We saw that during the pandemic, many brands, we mentioned Nike earlier, shut down their innovation engines, and it's taken them forever to get those things started back up again. And if there's something the consumer is going to respond to, it's newness. And when I mean the innovation here, I don't necessarily mean new technologies. I just mean fresh product. It's product I haven't seen. So important that brands do that. This is an opportunity for brands and retailers to take share. I think brands and retailers need to evaluate their partners and decide which partners are going to come out of this on the other side and do more with them. And the partners they think are marginal, they should do less with. I know that sounds draconian, but it's kind of the reality of the situation. Anyway, there's dozens of points here that we keep making to brands about how to attack this. Price increases need to be surgical, strategic. They shouldn't be across the board. You're going to make a mistake. You're going to make more than one mistake. Don't try to be perfect here. When you make a mistake, figure out how to fix it, move on. There's just all these levels of complication. But back to really to what I think the core of your question, there is at least some sense that we know what the tariff is going to look like now, even though we have this potential Supreme Court ruling, and I'm not sure how that's going to play out. But we went through months of uncertainty and datelines moving. And now I think we're at a point where we know what the tariffs are going to be, and we can now work against that. I think the last thing I want to say is that we've been in an environment where we've had to raise prices in footwear in particular over the years because of raw materials or supply chain issues and so forth. This is the first time we really faced prices virtually everywhere in the marketplace going up. It's not just footwear. It's just not outdoors. It's everything. And so the consumer their food prices are up, their gas prices are up, their automobile prices are up. Things that don't have anything to do with our industry, we might say, are going to see those prices go up. And we've never been in a situation like that. I'm not an economist, but I just don't see how that comes out to be anything good for any industry. And so that's one layer of uncertainty I think we still have to face into.
You kind of like led into my next question, which is the one I've been really asking myself lately as things do start to settle down, is like, ultimately, is all of this really going to have the intended effect? I mean, the reasoning behind all of this all along was supposedly to bring manufacturing and money back into America. As I'm sitting here covering it, and I'd love to hear what you guys are feeling too, it doesn't feel like that's going to happen. It feels like the ultimate impact right now is price increases, which is going to hurt consumers, stifle spending. So what do you think, both of you, on that?
We're not ever going to see manufacturers come back here at scale, ever.
Yeah.
Not going to happen.
Zero chance.
So, yeah. And so, it's preposterous to say that it's happening. And we've seen examples here, not in our industry, but, this recent problem with the Hyundai battery plant in Georgia. they can't get any workers. Okay.
And when they have them, they get kicked out.
Yeah. Well, they had to bring 300 people from Korea to work in this factory because they couldn't find anybody locally to wanted to work there. And so where are these workers who are going to work in these plants? You got me. It takes, well, in footwear, it can take up to 2 years to get a footwear plant up, to get the right machinery there, to train the people and so forth. Building the building is the easiest thing you have to face here. And then the disparity in wages between what our people are paid in Asia and what people are paid here are just too great. We might see some shoes partially built, assembled in the Caribbean, in maybe some Central American countries, although the infrastructure is a big issue there. But they still are probably going to be made out of parts that are created in Asia and then shipped here. So it's just not going to happen.
I would say in my world, zero. There's up, like I mentioned, there's zero chance. It's not only is it not going to happen here, but like say ski companies and snowboard companies, they still have to manufacture a lot in China because China is the only place who has the expertise to make those technical products. They can ship some stuff, but not all of it. And same with outerwear. So it's just not going to happen. And I think a lot about the manpower drain that this has caused companies, the amount of time their executive teams have had to spend on this that could have been spent somewhere else. The amount of money that they have to come up. And I think sometimes people don't understand, like, no, these companies have to come up with this money out of their pocket to get their goods out of the port. Well, that's all money that could have been used on marketing and would have flowed through the economy, right? On new initiatives, and the small guys are really suffering because they don't have the liquidity to do it.
Right.
Yeah.
So I think, listen, Q2 numbers turned out better than everyone thought. Back to school seems like it's better. I just think all the impact hasn't happened yet. I think it's going to get very rocky in the next couple of years. I don't think consumers can absorb all this. I don't think businesses can absorb all this. And it's sad. Matt, I always refer to this quote like that he told me when I first called him about tariffs. And he's like, unfortunately, the little guys are screwed. And they just, as one of my CEOs I talked to who has a smaller brand, he said, banks aren't running around like, let me loan you some money so you can pay tax to the government. Because that's essentially what it is. So it's just, I feel bad. I know a lot of these entrepreneurs, it's been tough on the big guys too, don't get me wrong. But these people who have spent a lot of time and blood and sweat equity in these businesses and build them up, that I don't know if they're going to come out the other side. The long tail effect of this on consumer spending. So I think we have a lot more coming our way. And it's just a shame.
Yeah.
It's the unnecessary forced error for the economy and for companies, for our own for American companies and workers. And I have now heard that more layoffs are coming because now that they know, before it was like, well, let's wait and see, this could go away tomorrow. Let's not do anything rash. Well, now they know in general what they're looking at. And so I think the next piece are really job cuts for a lot of people. So, yeah.
All right. We need to lighten things up before I let you guys go. So let's do our mixtape rapid fire section. Are you guys ready for these fast, fun questions?
Sure.
Okay. First off, a retailer that you think is navigating the turmoil of this year beautifully.
I agree with Tiffany. Journeys is head and shoulders above everybody out there right now. They know who their customer is, and they are just executing the hell out of it. It's a fabulous retail story.
And I don't know if anyone's navigating it beautiful, like the tariff situation, because
no,
it's messy,
right?
Yeah.
But I guess I've been impressed with Urban lately because, they've got free people and those numbers are just like so insanely good. And they have been for years. Like it's just good numbers on top of good numbers. Now they have free people movement, which is growing like crazy. And the thing about free people, it's not just a direct story. Like I have a lot of shops that in my world that are starting to carry free people and free people movement, and it is selling like crazy. So it's also a wholesale story, which I think is interesting. Anthropology has turned around, is posting great numbers. The woman who leads it, Tricia Smith, stopped at Tilly's, which is a company in my world, briefly before that, she was at Nordstrom for years. She's doing interesting things, has really made an impact there. You've got Urban Outfitters, which is, been the laggard and struggling, and they seem to be getting a little more positive momentum there. And then Nuuly, which is, I'm a customer of Nuuly, the rental service, and their numbers, they seem to really have put a dent in Rent the Runway. So that company is always intriguing to me personally because they're publicly traded and I feel like they have like 10 Hain family members in the executive suite, like the guy who's a CEO and the founder of Urban Outfitters, like I swear, like his whole family is in the executive suite. I'm not sure about their corporate governance, but they seem to be doing something right. I'm impressed with how many pieces of their business, because there's so many pieces, are working.
Okay, next one. What is your favorite outdoor activity?
Before I quit Facebook, my Facebook descriptions referred to me as an avid indoorsman.
Who covers the outdoor industry?
So I fear I guess my favorite thing to do outdoors is to swing my granddaughters. How's that?
Oh, that's good. That's a good one. What about you, Tiffany?
Yeah, I was just going to say anything by the beach. I mean, that's like how I keep up with my girlfriends. We're all working. We all have families. We go for big power walks by the beach and catch up and socialize. And then we go to brunch after. So that's
And if you don't do that when you live in California, why are you living in California, right?
True.
What's a sport you follow religiously? And if it's applicable, who's your team?
Red Sox baseball.
What about you, Tiffany? Are you a sports watcher?
Oh, I am not a huge tennis fanatic. Like, I can tell you more than you want to know about every top tennis player. Like, my husband will only go to one day of tournaments with me because he's like, he can't take me in full tennis mode for more than one day. So, but no, and there's so many good stories in tennis right now. It's like, I'm a full on just nerd. We went to the US Open for the first time. It was incredible. Yeah.
What is the thing that you will continue to buy no matter how much the price increases?
Wine.
Oh, that's a good one. I can't believe I didn't think of that.
You know what is so funny? That's mine too, Matt. What does that say about us? Mine is, but it's specifically French wine.
Oh. My brain went to like beauty products. I mean, you have, at least women, we have like our slate of things and I need them. I will buy them no matter how expensive they get.
Well, I have to say to our previous discussion, I also have on my list Birkenstocks and Hokos.
But those last for several years. So you might be able to just get away with it for a few more years before you have to buy them again.
True.
Last thing is your favorite sporting or team philosophy that you think applies to all of life. There's so many good ones from baseball.
Yeah, Earl Weaver, who was the manager of the Baltimore Orioles for a number of years, highly successful. He said the three things to be successful in baseball: great pitching, great defense, and a 3-run home run.
How does that apply to real life, though?
So pitching is marketing. Defense is a unique selling proposition that I control and no one can take away from me. And the 3-run home run is the hot item. And we never can have too many hot items.
Okay, I totally get it. It's really good now that you explained it to me. Thank you.
Good question, because I was like frantically, like, wait, I got to figure that one out. I don't know. Back to me, it's tennis.
Yeah.
The thing about tennis is players are out there all on their own. Like, there's no team, right? And they're not playing against the clock. So they could be on the verge of winning their biggest career title. So much pressure, but they still have to serve it out. And like, it takes nerves of steel. So I think it's important to have nerves of steel. And they also had grit. They've got to let go of dumb mistakes. They're going to make mistakes. And if they focus on them, they're going to lose. So I see how they come back, like people who come back and have the grit. And I would like to sort of emulate them if I can. I'm not there yet, but that's one to emulate.
Certainly useful this year. That's a great note to end on. Great advice for our current time. So thank you both for that and for being here today.
Thanks for having us.
Thank you.
And thanks to all of you for joining us. If you have thoughts on all the things we discussed today, we'd love to hear them. Head over to the Retail Touchpoints LinkedIn page to share your take and let us know what you'd like to hear about in future episodes. Thanks, everyone. Talk to you all soon. Thanks for joining us for another episode of Retail Remix. Be sure to subscribe so you don't miss a future episode. You can find us on Spotify, Apple Podcasts, YouTube, or your favorite podcast app. Until next time, keep mixing it up.